Hi, this is Hoang, CFP and EA in California. In this video, this topic becomes simple. What should go in your trust? What falls under your will? And why that matters for probate, taxes, and your family. Let's start with the trust. Think of a revocable living trust as the main bucket for important assets that should avoid probate and be managed smoothly if incapacity happens. For most families, that usually means the home, rental properties, taxable investment accounts, and often business interests. Real estate is usually the highest priority asset to title into the trust. When the house or rentals are in the trust, the successor trustee can step in and manage, sell, or refinance without going to court. If those properties stay outside the trust, the family may face probate, and if property is in another state, even ancillary probate. Next are non-retirement financial accounts. Taxable brokerage accounts, mutual funds, and larger savings or money market accounts are often good candidates for trust ownership. That structure lets the successor trustee continue managing the portfolio and paying bills if the original owner dies or becomes incapacitated. Valuable personal property can also be assigned to the trust. This can include artwork, collections, jewelry, or high-value equipment. Business interests such as LLC interests, partnership interests, or closely held corporate shares are also commonly assigned or retitled to the trust, so control passes according to the trust terms. Now, what usually does not move into the trust? Most retirement accounts, including IRAs, Roth IRAs, and 401ks, generally stay in the individual's name. Retitling them to a trust during life can create major tax consequences because ownership changes can trigger a taxable distribution. So where does the will come in? In a trust-centered estate plan, the will is usually a pour-over will. Its job is to direct any asset that was left outside the trust into the trust at death, so the trust instructions still govern distribution. The will also has another major function, naming guardians for minor children. That is one of the most important jobs of the will. It also controls assets left in an individual's name alone with no beneficiary designation and no trust title, although those assets may need to go through probate first before they pour into the trust. Here is the simple framework. Use the trust for real estate, taxable investments, larger bank assets, business interests, and property that needs management or protection. Use the will as the backstop to name guardians and catch anything that was not properly moved into the trust. If you want more videos on how taxes, investments, real estate, and estate planning all fit together, hit like, subscribe, and drop a comment.